Hello, and welcome to Module 5 of the Forex Complete Solution Intermediate course. In this module, I'll be covering support and resistance levels. Support and resistance levels are one of the cornerstones of technical analysis. Support is a point price will not fall below unless there is a significant event to cause the price to fall, i.e. a fundamental news release. Resistance is a point where a price cannot break above. Support and resistance levels are essentially demand zones. It will show how buyers and sellers are reacting to price. A support zone can hold if buyers see fair value at that price and continue to buy. A resistance level can indicate a level where buyers are no longer willing to buy. It can also represent an area where buyers are now sellers. Okay, so they're selling off their original position to take profit. Support and resistance levels can be seen in various guises. We can have horizontal and vertical support. We can have Fibonacci support. We can have moving average support. We can have pivot point support and resistance levels. And we can have channel support and resistance levels. Generally, the longer the duration of the support and resistance level, then the stronger it is. For this module, we'll be looking at the USD JPY to show how to create support and resistance levels on your charts. So here we have the USD JPY, and we have a daily chart of the USD JPY. Now I've already calculated my weekly pivots. Okay, in the pivots module I had showed you how to calculate your pivots. You go to investing.com and your fx.com to get your pivot point calculator, but I have already calculated my pivot points there for today. So again, the first thing you're looking for is the trend, okay, to find a valid support level. So we can find our trend again at the bottom of the chart here, and we can pull it up to get our valid trend line in place. We have 1, 2, 3 touches there. So I'll just configure the trend line. And there we have it. So there's your support number 1. This is your vertical support, your trend line support. So we have a valid bottom on our daily price action, and the market is in an uptrend. The market has tested the support and continued to buy. It has tested support again and it's continued to buy. And now we're at a pivotal point here. The market is back into a support level on the trend line. So the trend line will tell us whether the market is still in still the buyers are in control or whether the sellers are in control. And until we get a confirmation below the trend line, we're still in the uptrend. We can have a look at our weekly pivots now as well. Okay, just to add in a support and resistance level. As we've discussed with our pivot point module, your pivots will be open, high and close points that are calculated. So these are our weekly pivots, okay, and I put these onto my daily chart of my USD JPY, and these are also support and resistance levels. So it's a second support and resistance level to go along with our trend line. So if the trend line breaks, what's our next support level? Well, you're coming into your weekly support 1, okay, and that will be your level, and it had held previously here, and you'd be looking for that to hold. Now, if the market continues, what's your next resistance level? It's your pivot point, your weekly pivot point, okay, and if it finds support there and buys again, what's your next resistance point? It's your weekly R1. Okay, so there's two ways you can find support and resistance on your chart. Okay, your major trend line, which is your stronger trend line, the longer the trend, the stronger the trend. Okay, so the market has been tested once, twice, 3, 4 times, 5, and now we're coming into a 6th test. So this would be a major support area. So if that broke, okay, you'd have to maybe have a change of bias, but so far the line is held. So that's it, the support and resistance of your trend line and off your pivot points. Now, along with your trend line, we can pop in a upper channel. Okay, and you can pop a channel off a valid top, and create a channel line. Okay, and we'll just configure the channel line. There we have our upper band channel line. So again, here's another resistance point we have. Okay, so the market has tested it, sold off, it tested again once, twice, and the market sold off. So that's another resistance point we can add onto our chart. So if the market kept buying and we bought above our pivot and bought above our R1, what's our next resistance point? Well, it will be your upper bound channel. Okay, your upper band, as it has been tested before. Now, that would be an area of interest if you were a seller. Okay, you want to have a confirmation the market tried to buy it once and then it sold off. And that was quite a nice move. And where did we find support? We found it back down on our lower band trend line. So there's three solid support and resistance points now on your chart. Okay, you've got your trend line, you've got your upper band channel line, and you have your pivot points calculated. So these are tools you're going to use on a daily basis, on a weekly basis to gain your entries and exits, and they will work on all time zones. These are weekly pivot points. Now, if you were looking to trade in a smaller time frame from 30 minutes or 15 minutes, you'd calculate your daily pivots, okay, and they would give you your support and resistance zones for your daily price action, and I can show you those there now on the DAX 30 just to show you my daily pivots. Okay, so these are my daily pivots. Okay, so I've got my daily pivot, I've got my S1, my S2, my R1 and my R2, and as you can see the price is below the pivot. On our DAX today, our next resistance level will be our S2. Okay, so far the market is coming into resistance at our S2, and what's our support at the moment? It will be our midpoint S2 down at 1887. We found some support there. 1, 2, 3. We've two dozen candles there on our 15-minute chart. So if you're looking to day trade, put in your daily pivot points, and if you're looking for a longer time period, again you can put in your weeklies, but you can look at the two. Okay, if your weekly pivot point is coming into support and your pivot point is also coming into support, well, that's another strong trend line. But for a longer term trader, for your monthly, daily, 4 hourly and hourly, you'd be looking to put your weekly pivot points, and again from 30 minutes down, 15 minutes, 10 minutes or 5 minutes, you calculate your daily pivot points. Okay, so the daily pivot points will be your previous day's high, low, open and close. If you're trading equity, it will be your previous day's high, low and close. If you're trading forex, if you're trading a weekly pivot, it will be the Monday open, the Friday close and the weekly high. They'd be your 3 points if you're trading forex, and if you're trading equities, it will be your weekly open, your weekly high, your weekly low, and your weekly close. And that's how you calculate your weekly pivots on your equities. So back to our USD JPY daily chart. There's our 3 levels of support and resistance. Okay, again, trend line, channel line, and your weekly pivots. Our next support and resistance tool we can look at is a moving average. Okay, so we can click on our moving average, add, and we'll use a longer term. Again, I'll look at a 100-day period moving average, or sorry, a 100-day moving average. And I'll just calculate that. There's our 100-day. I'll just make it stand out a bit more and close. So again, another level of support. So our market is above our 100-day moving average. It's above our pivot point S1. It's above our major trend line, and yet it's below our channel. So we're still looking very bullish in this market. So a high probability trade here would be to buy. Okay, 3 support levels, 1, 2, and 3. Okay, and what's our next resistance level? It's our midpoint pivot, or sorry, our weekly pivot point there. So we have a roadmap. No matter what we're looking to do, we have our trade plan in place. Okay, the market is telling us what to do. So we're not going to take a trade here. We're going to wait for confirmation, and our confirmation are our levels. Once you trade off your levels, you're going to be on the correct side of the market. Okay, once you trade off your levels and place your stops correctly, you're in a high probability trade. What you don't want to do is take a trade in no man's land in between. Wait for confirmation, because there's always another trade. Okay, whether it's the next 15 minutes, half an hour, the next hour, or even if it's the next day. Once you're set up to trade, just be patient and wait. Okay, as I said before, the less you trade, the better. There's no need to trade 10, 15 times a day. Okay, wait for the bigger moves, and once you get in at the correct times, you'll be trying to get the bigger points. So that's a fourth support and resistance level on our chart there. We have our moving average, we have our weekly pivots, we have our trend line, and we now have our channel line. So the next support and resistance level we're going to put on is our Fibonacci extension. Okay, and we can click it on there and bring it down to the bottom here and place it up at the top of our chart here. Okay, and as we said before, to get your exact figure, you calculate it's 12,585. So you can configure that to 12,585.00 and close, and your bottom candle there is 10,625. Okay, so we can just change that there. Okay, and close. We have our Fibonacci in place. So the Fibonacci is another support and resistance level, and straight away you can see where we're finding support. We have it at a 61.8. Okay, we have it again at the 50. Significant points where the market is finding support. 38.2 again, so all the way up with our trend line, and our Fibonacci is giving us support levels, and right to the current price level. Okay, what happens if your S1 breaks? If your trend line breaks, you're looking for your S1 to support. If that breaks, what's our next support? We've got our 23.6% fib. If that breaks, we're looking at our 100-day moving average. So as you can see, step by step, if you enter a trade, your first level if you enter a short, if the market broke below the major trend line and you entered a short, what's your first target? Your weekly S1. What's your second target for a valid trade? It's your 23.6% fib. What's your third target? Your 100-day moving average. And if that broke all the way down, we have support levels. Okay, so as you can see, straight away you can put these tools onto your chart and you have a valid trade entry and exits. And the main thing again is your discipline to take the trade at the correct level and the patience to wait on that trade to develop. Okay, and once you've entered a trade, if the market reverses, you'll set your stop at levels. Okay, so if you enter a short, you can set your stop here and wait for the S1. Okay, if the market continues down, you can trail your stop lower. If the market reverses, you're going to try and take some profit, but you'll know when to come in and out. You're not just guessing. Okay, there's no guessing in trading. If the market does reverse, we'll just come out of our trade and we'll wait on our next trade. It's not going to just collapse down 1, 2, 3, 4 levels. Trading isn't quite that easy, but we do have valid points to enter and exit the market. Now, if the market continue to buy, where's our levels? Again, you look for your weekly pivot, then you look for your R1, and you look for your upper bound trend line. And where does that hit as well? Just at the top of the Fibonacci. Okay, right there. So whether you're looking below or above, we have support and we have resistance all the way. And again, it just takes time. Okay, so again, I keep referring back to your homework. Once you have these levels in place, you're going to write these figures down. Okay, you're going to know that my 23.6% fib here is 12122. You're going to know my upper bound level is 12585. So I can place my trades accordingly. Okay, I'm not just guessing. I'm not trying to jump in and out of the market. We're waiting on prices to be hit. So on that chart there, From the S1, there's one trade. Okay, the pivot, there's two trades, or one, there's three trades. My weekly upper bound level and my trend line upper bound level. Okay, there's 3, 4, 5 upper bound trades if the market remains bullish. If the market breaks below trade number 1, my pivot, my main trend line is broken. Trade number 2, my S1 is broken. Trade number 3 is my Fibonacci, and trade again, you can still enter a trade at my moving average. Okay, so up or down, we're looking for entries and exits. Okay, and it can really be that simple once you're going to stay on the correct side of the market. Now, again, the next thing you're going to be doing all the time is technicals and fundamentals. So you're looking at your news events as well, okay, to give you even a higher probability trade. So that's why we look at our fundamentals. So you look at news releases constantly too, and that will also keep you on the correct side of the market. Now, what happens when a support level or a resistance level is broken? Well, what happens is if a support level breaks down, then the level above becomes resistance. Okay, so if the market breaks below the trend line, then the trend line becomes resistance. If the market breaks above the support line, now see, if the market breaks above, this would have been resistance. Okay, and then the market broke above, and now it's support. Okay, so the market's trying to break through the 38.2% fib. When it fully closes above the full body of the candle, our resistance has now become support. So support becomes resistance, and resistance becomes support. Okay, now in summary of support and resistance areas, they provide valid entry and exit levels, whether longer term with your trend line or with shorter term daily fluctuations using your daily pivot points. Okay, these support and resistance levels will give you high probabilities areas to place your trades. For confirmation of a level, always try to have 2 or 3 levels of support and resistance at a price level, as this will give you the trade a higher probability of success. So thank you very much for listening to our lesson on support and resistance, and I hope you will enjoy our next module, which will be on a further study of global economics. So thank you very much, and goodbye.